Have a good day. I'll see you soon.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey everybody, happy Thursday. Welcome back. It's 10 o'clock. This is Chris Pulver here. How's everybody doing today? Just finished up a live session for my Flex trading room. Did a little daily sell trade on the SPX around 5,600. We'll keep an eye on that one for the next maybe 30 to 45 minutes and see if I can get that theta decay, grab a few bucks out of this. I'm looking for a $40 profit, or about 40 cents per contract. And I'm also looking at a 562 out of the money based on a little gamma level that I have. So I'm staring at this 562 right here, which I'm looking at the current net position starts to fill up a little bit more. This started out this morning around 1,000 net. Now it's around 1,423. So I paid 80 cents for a debit. I'm just looking to see if we will squeeze up there, try to find, 562. If that is the case, an at the money call option will probably be paying closer to like $2 or so. I can show you right here on my platform. Another all-time watermark high for the portfolio for the year, which is pretty solid. This is good. We'll see what's really running. I've got some Pfizer trades looking pretty solid. Big P&L on the day. Let's keep an eye on things. So no complaints on my end. This little rotation has been pretty favorable. The market's even being somewhat mixed. We've had a pullback on the Qs and semiconductors. We've had a pause, I would say, on the S&P. But I'm maintaining some pretty good positions with a lot of options. That time works in my favor. Some directional plays, but I've got some pretty nice P&L that's rolling in today. Also on Pfizer, we're at $30.50. I'm looking to see if this gets called away by Friday. I doubt we're getting above $32, but that's a pretty good price target for right now. All right, let's see what else we have. I have Netflix earnings coming out today after market. We're back up to 650. I did take a look this morning in my trading room. Domino's Pizza. Frank and I talked about this one earlier in the week. DPZ. It got absolutely smoked with a tiny little miss in revenue by 0.5%. I mean, maybe that's not tiny, but it's not 1%. It's not a big surprise of 10%. I mean, it beat earnings per shares by 9.38%, missed in revenue, and the thing tanked $60. But taking a look at this on the technicals, if you just connect some lows, it's sitting right at that trend line. So is this it looks like we're aggressively trying to fill the gap from an open around 410, 411. I'm not chasing that or anything, but I just thought it was interesting because the trade we were looking at taking was a credit spread, and the 460 by 465 was the bear call spread. So that trade right now, this would have been filled for about $7 or $7 and change, anywhere between 350 and 375. So we'll say that this would have been about a $7 credit had you taken the trade with us on, I think we talked about this on Monday, possibly Monday. So let me just evaluate the price right now. This would have been a 726 expiration, DPZ right there. Trade, this would have been out to next Friday. The bear call spread was a 460 by 465. Yes. So 460 by 465 was a bear call. And then the bull put was a 515 by 510. 515 by 510 there. So what started out at a $7 credit is now trading for $4.79. This is exactly how the mechanics of the trade works. So you're in for $7.50 credit up front. Right now it's trading for $4.80. You just made $2.70 profit. Okay. Now as a percentage, you just turned that position to a 38% winner. It's pretty good. right? Did the trade cost you an arm and a leg? No, it cost you like $250 to $300 buying power, right? So that's how this stuff works. I keep emphasizing this. And I want to talk about this a little bit more yesterday. I asked, Nick, when I was on the show, hey, just give me 5 minutes to talk about options. Maybe it's more helpful to talk about this in relation to a currency. How many of you out there are in a drawdown with a currency pair right now? And if so, what currency pair is it? I probably have a lot of traders that are stuck in yen crosses. I might have some traders that are stuck in some dollar crosses. Just let me know, because I just want to share, if I could trade options on currencies, my life would be a lot easier. Drawdowns that I experienced in 2020 when I had to hedge my way out of some yen crosses, life would have been a lot easier if I was just in some option trades. Yoshi's in gold. Okay. I see that US Airlines had earnings. Okay, let's take a look. Is it good or bad? UAL. Let's go United Airlines here. So not a huge move. I mean, I'm looking at this from a technical side. We're still stuck right in the middle of all this chop. If we take a quick look at airlines, Delta has been pulling back. I'm looking to see. I mean, maybe I'm asking too much here, but I'm looking to see if we can get a pullback around $30 and I can just kind of buy the range on Delta. That's about it. I wouldn't really want to jump in and buy this too high. The same thing is true on something like Royal Caribbean. RCL is sitting here at these crazy all-time highs. I want to short this stock, but it just seems to do really, really well for right now. This is another one with earnings coming out next week. This will be a big kind of make or break given the price point, given this appreciation. Man, I was happy with RCL when I bought it post-COVID. That worked out pretty well to fill the gap. I was looking for a double bottom. I should have just freaking got in, like kind of dollar cost average. But, this is $20 different. So for me to say like, oh, I should, it's like, well, precision wise, $20 off on a stock price is a big difference, especially when the low is 20 and it actually bottomed around like 39. That's not catching the bottom. I mean, that low's around $31. The low here is around $20. So if I'm looking for some precision, I wanted to come back to $20. It didn't do that. But the sheer appreciation from $30 up to 160, who doesn't like a 5x return? Everybody does. Okay. So I see Yoshi's in gold. All right. So let's talk dollar Swiss. Okay. I'll do a little weather report like I typically do. Gold is sitting near the all-time high. So we've had a bit of a pause from Tuesday. Yesterday's indecision on gold. Today indecision on gold. Tuesday was a nice little push to the upside as the markets were ripping higher. Right now we're noticing, okay, SPY's up about 0.4%. E-mini futures on the S&P up 0.2%. NASDAQ up 0.2. NASDAQ futures up 0.3. Q's up 0.5%. Dow is up a little bit. IWM is also, look at this IWM, just kicking some booty. Get up there to some fresh highs, would you? All right. Let's go gold. I want to talk about it like kind of an option trade on dollar Swiss. So Zen's asking, dollar Swiss still long? I'm still long. I'm long Aussie Swiss and CAD Swiss and Euro Swiss and Pound Swiss and New Zealand Swiss and dollar Swiss. I'll share what I'm doing on it. I've got more positions pending on the dollar Swiss and levels to look to add into, but I'll talk about that in just a moment. So I guess the outlook is, what do you want to do on gold? What do you want to do on gold? Do you want to be long? And if so, how do you want to be long? I mean, obviously, if you want to put out the capital, this is my example yesterday. If you bought GLD, it's going to cost you $22,000 cash. If you have a margin account, it's going to cost you $11,000 cash, right? So that's fine. I mean, your return on capital, if gold is up, the one thing that's nice about owning the shares is time doesn't matter. You can hold it forever, okay? If you're in options, time is a factor. So if you're a seller of options, time works in your favor, okay? If you're a buyer of options, time doesn't necessarily work in your favor. You need price to go directionally. If you're typically buying options, you need price to go directionally within a window that you're trading. Okay. If you're getting extra time in the trade, that's called extrinsic value. If you're getting extra direction in the trade, that's called intrinsic value. That's the actual value of the option. So as an example, let's use dollar Swiss as a currency. I just want to share this because if anybody is, let's say you followed me for the last couple of years in my trading room, and I was a very big advocate for going long the dollar Swiss. Okay. So I was patiently waiting for this trend line to break. I was looking to see when I had some oversold conditions, I was looking to buy. So I did establish some buy positions in here. I had a nice little gain. I treated this initially, just look at this area right here. I treated this initially as that was a sign of a bullish pattern. So I started to scale myself in. So I had a buy trade in off these lows. And then I put a fib on from this low to high. And I had a 382, had a 618, had some pullbacks, bought again at the lows. So I probably just on this little setup, I had 1, 2, 3, 4 entries. And you're looking at this like 4 entries and it took out the lows. Did you get stopped out? No, I did not. Why? Because I'm long on this. Why? Because this is my pocket and pivot target that I want to trade back to. So I'm carrying this as kind of my core position. All right. Now, let's say that in this dollar Swiss, okay, like right now, for example, if we just go to current price. So I'm in probably close to 20 entries on the dollar Swiss long. Okay. So order here, 382, 618, bought the bottoms again, look for a trend line break, bought some more, added on the right hand side of the trend line, tried to get profit back up here. This is still my profit target. So I've been adding through this run, and I'm looking to add more on even a correction. Now, what I currently see on this pattern is potentially this high, to me, this is a longer term head and shoulders. Okay. And so what I see is this area that we're experiencing right now is a correction in this dollar Swiss that could come all the way back down to find some symmetry around 8,600. All right. So if we come to 8,600, I'm looking for a bullish pattern to emerge, and I'm going to measure. Okay. And look, if you want to make a note of this recording, take a screenshot of my chart, copy this idea. I do this all the time in my trading. If I see this chart right here and I measure a low to a high, okay, all I'm going to do is project the symmetry from there. So let's say that we are going to pull back all the way to 85.50. Okay, let's say we pull all the way back to 85.50. So let me drag this over here. All right. So what I would be measuring would be this. This is my low. This is my high. If we come back to this kind of perfect symmetry where this is my left shoulder and we find this over here with the right shoulder, my projected symmetry for my profit target is at 94. Everybody see how I did that? So I've got a low to high swing, a higher low to higher high swing, and that would be profit target 1. Okay, now if this is going to be a 5-wave move, this would be wave 1, this would be wave 2, this would be wave 3, this would be wave 4, and this would be wave 5. It still gets to my profit target that I'm looking at in the bigger picture. But for me to add to some of my winning positions, and this is on my YouTube channel, I have a bunch of these videos called Trading 101, Keep It Seriously Simple. I have a lot of videos that talk about this stuff, just how I've traded over the years. Okay, symmetry is a big deal. If anybody's familiar with Fibonacci's, this is my favorite Fibonacci. Okay, A to B equals C to D. So whatever move I have here, pull back, push. That's my profit target. So I measure this move and I project that move. And that gives me a really consistent way to make profit. Okay. I like how somebody says, dude, it's a double top. Well, is it a double top at 30-year lows? I mean, if you want to be a seller into 30-year lows, then be my guest. That's not me. Okay. When we come into 30-year lows, I'm way more interested in buying. So we'll see how it plays out. But 94.50, target 1, filling in this pocket, 96 to 97, target 2, all the way back up to range highs, 1.00. Okay, so you can use leverage in Forex, right? If you wanted to trade options, here's a good example. I could do this. Right now at 88.47, let's say we could trade options around this currency pair. Well, I could say, you know what? I think that price won't go below let's say 8,400. Okay, so let's just treat this like an option. Okay, I'm just using this as an example. If I put a naked put at 8,400 and I could collect, let's say, $1 credit. This is what it would mean in the options world. Okay, so $1 credit means that if price for the duration of my trade, as long as price stays above 8,400, I'm going to make a dollar per contract. Okay. So 8,400 would be my line in the sand. So if price comes down towards it, but doesn't break it, I'll still keep my dollar credit. And I can sit on this trade for 30 days, 45 days, 60 days, 90 days, whatever duration I want. All right. If price were to come down through 8,400 and I decided, you know what, it's at a low enough price point, I decided that 8,400 support, if I wanted to own shares, if I could own shares of this particular asset, then I could own it at 8,400 and also subtract my credit. So I could actually own it cheaper and then take it at a position where I'm like, I want to buy it there anyway. That's what this put would be for, right? And if I'm right, price can go down and I can still make money. Price can go sideways and I can make money. Price can go up, I can make money. Price can go up, I can make money. That would be an option play if this was, a currency pair I could trade options on or whatever asset it is. I'm putting a trade on where if I wanted to own it, I'd own it down there. If I want to collect some credit, there's 4 out of 5 ways I can make money, right? If you want to be a little bit tighter, if you think this is closer to the bottom, okay, then you can start putting in some credit spreads here where you sell a put, buy a put. If price goes against you, your risk is defined. If price goes in your favor, you're making profit, probably 50 cents on the dollar, okay? If price is showing more signs of bullishness, well, you can do more credit spreads here for income. You can sell more options there, or you can get long on the option and then trade the direction. A lot of times when we see 3-wave moves, 1, 2, 3, 3 waves are pretty aggressive. Directionally, if I went out, let's say 45, 60 days, 90 days, 120 days, if I get it right directionally, I'm paying for the time, yes, but I'm getting the credit to go in my favor if I'm right directionally. So my point is, and here's a good example that I've done the last couple of years when traders want to understand, options. I use an example of what I experienced in 2022. Okay. Here's a fun story for 2022. I had what I thought to be a pretty good technical trade. Okay. When the dollar yen started to break this level here on this little ascending wedge, I was waiting to see it get overextended and we got into like 130. All right. So we went from 115 to 130, went up 1,500 pips. And technically, you see all this stuff here. This is on my daily time frame. I had an overbought condition. I had a really extreme bar count. And technically, I was looking for a sell trade. Okay. I sold the dollar yen around 130 and sat on that stupid piece of crap until 150. Now, I didn't just sit on it for a $2,000 or a 2,000 pip drawdown. I stopped myself out, got back in, stopped myself out, got back in. But at the same time, I realized, look, I'm clearly missing the fundamental move here. So I was hedging with Aussie yen long. I was hedging with Euro yen long, and it helped mitigate some of the nastiness. But here's an easy trade. Had I started my trade here instead of selling in Forex and getting beat up by 1,000 pips at a time, if I had an option position and I could just do a bear call spread and price went against me, 2 things happen. 1, if I define my risk, I just take a loss and I'm done. Okay. 2, if I had a long enough duration on this trade, I could ride the losing side of that trade all the way up to these highs and then take ownership and sell this thing at a price that is way higher. Okay. So that would be if I sold a call here, bought a call here, that long call is crazy profitable while the sell call sucks. But I can hedge that position because I'm long on this instrument as well. Right? So I just want to go back to what I talked about yesterday for 5 minutes. If I had anybody following me and you want to give me like a month of your time, or you want to do a one-on-one session with me, if you're interested in any way of trading futures or trading options, improving your stock portfolio, I promise you that if I can turn the light bulb on for you for options trading, it will change the way you trade. You will go from a 2-dimensional trader to probably a 3 or 4-dimensional trader. It does broaden your horizons quite a bit. Okay. I know the language is weird. I know it seems intimidating. There might be sessions that I run here with A1 Trading, and when I'm on with Frank and we talk about stuff and people are like, what are they talking about? It's not that difficult, right? It's a little bit of addition and subtraction and just knowing some terminology. That's really all it is. Okay. So anyway, that's it. Let's get some crosses. Let's get some symbols here. We're up to 559 right now in the SPY. I'm just going to keep an eye on this one to see if I get up towards 560 and change the fill gap. maybe 561, 62 to hit my gamma squeeze level. So the SPY today is, so we've had some pretty serious questions in the markets as semiconductors were hit hard yesterday. The Russell is it's fading a little bit, but we'll talk through the instruments here. So we've mentioned pretty firmly that the market is bullish until it's not, or the market might seem and feel like it should be bearish, but it's not yet. Okay, but if we start to see, and this is a price level that I'm watching pretty carefully. Okay, so if we break 555 or 554, that's a decent floor on this SPY that would justify, like, if we're going to have a dip, just take a look at the charts here. We have trendline support. Could we correct a little bit? Sure. We have a high, we have a low. We could come back into the middle, have a bit of that dead cat bounce. If the bears are going to fade this rally, and fade these all-time highs, okay, but where to, right? Is it just a little correction in here to find trendline support and then the market picks it right back up again? Or are we about to see something a little bit more threatening? If we go into here and it starts to unfold a little bit more, this is the area that I don't necessarily want to see breached. If we hit 542, let me check here on the left-hand side. Okay, so 542 is my floor. I mean, the last major level of resistance was here. Okay, so if we come all the way back down to 542, could this be a bit of a bear trap? Possibly. And that would be a pullback, but it'd still be single digits. If we came to 542, I'm pretty sure that's like maybe 5%. Yeah, that's a 4% correction. Healthy. It'd be fine, right? April, we had a 6% correction. NASDAQ, we had an 8% correction. Just in the last week of trading, 2 weeks of trading, the Qs have been down almost 5%, and the S&P's down just a couple of percent, right? So we had from high to low, pullback around 1.46. I mean, that's nothing, So it's like there's nothing about this. It's like, oh my gosh, the sky is falling and the market's going to tank. Not necessarily. I think what we saw yesterday was pretty eye-opening where, okay, the market thinks that Trump is going to be president. The market thinks a high probability that the Fed is going to be cutting rates. These could all be good things to spur on this continuation of the bull market and finish the year at all-time highs and everyone's happy. But look at the news that happened yesterday with Trump talking about Taiwan. Okay, now all of a sudden the market's like, oh crap, are we going to have a trade war? Are we going to have, terrible geopolitical relationships out there? Maybe. All these things were like buried under the surface that were still there, right? Optically, it's like we've never had a awesome relationship with China, even though I really think they need us, we need them, and we'll keep it adversarial or make it sound like it. But in the end of the day, we're the biggest consumer. They're the biggest producer. And it's been like that for a long time. I don't see that necessarily changing. But if we have a trade war, who knows, So anyway, point is, we've had a 1.5% correction on the SPY. It's not bearish yet. Okay, what has to be a break? Well, if we break below 555, okay, fine. We're taking out some recent lows. That would be like last week's low. And that's what I'm watching for, right? So right now, what's interesting, we're red on the week, okay? If we get back into here, we started the week right there. If somehow we get back into this gap again, I mean, the gap is way the heck up here. This is a large gap to fill. So this market could make a decent attempt to fill the gap, right? And we could essentially go nowhere for the week because we started right here. We could end right there. And I think that 562 maybe has some merit going into tomorrow. But as we go into this week, this is one thing I said on Monday. Monday's trading broke the all-time highs. The probability is we're probably not taking out the lows for the week. So if this is a high to low and the market's going to spend, today and tomorrow kind of chopping around, maybe Friday is a little bit of a correction back in to fill the gap. And then we have another watch the high, watch the low type scenario. Make sense? So that's what I'm looking for. SPY hasn't broken any floors yet. NASDAQ looks a little bit more ominous, but here's another trend line, right? Trend line support. We've had a correction. We haven't broken this floor. We haven't filled any gaps yet. So I am wondering, and this is what I kind of like to see personally. I'd like to see the Qs head down a little bit lower, come into this trend line, come in to kind of fill this gap and see if that's the area that this market can pick itself up. Now, I personally like the rotation that's happening with small cap catching up faster and making a pretty big rip. I like the Dow as a price weighted index going higher and kind of not necessarily outperforming, but stabilizing right now versus the Qs are a little bit more volatile. Speaking of Qs being volatile, let me look and see if, can I get an NQ trade on right now? Let me look at an MQ trade right now and see what this is going to look like. If I went out maybe towards the end of August, I'll go out 43 days. Okay. And let's see here. I'm curious. I might do an MNQ as a micro futures, but I might do a trade here where we're trading at around 20,000. If I did, let's say let me put this at it's usually like a 25 delta for that kind of outlier move. I mean, it's beyond a 1 standard deviation. So if I bought the 19,200, so I buy the 19,200 and I sell the 19,100, that's not bad for a debit spread. I would be buying the 19.2, I'd be selling the 19.1. That would be a max profit of around 1,600. Now, on top of that, let me see if I went down to where's a price level that's just ridiculously low. Let me go to NQ. And the reason why I'm even looking at this is because the recent sell-off has jumped up the IV rank. So I should be able to be a seller of options and generate a little bit more premium out of the NQ. So what level would I look at? I want to see if this was all the way down here towards like 17,200. Let me see what that price point is. So I need to cover a $20 debit at 17.2. Easy. I mean, heck, I can go all the way down here towards 16.5. Let's see here. So I'm looking for about 40 bucks. So I can go 17.5. I'd like to go closer to like 17,000. Let me see what 17,000 is. 17,000 would be 29. That covers. Okay. So right there. So $10 credit. See if I can take a stab here. So $10 credit should be about 500 bucks. Yep. So $10 credit with a futures contract. There should be about $500 on the credit side. If I wanted to take a profit target, I'd look at something to the tune of, maybe $100 to $200 out of the trade. The thing I don't love about this is it does tie up a bit of capital. Looking at my option buying power here. Let's see. 915. Okay, so I've got some portfolio margin. So that one, I just had some of these approved. So a portfolio margin here, portfolio margin here. I've got a lot more option buying power. So I think on those accounts, I'm going to take this trade. And I mean, everyone can take this trade. We're okay. This trade's out for 43 days. I'm going to see if I can get $10 credit. $10 credit. My line in the sand is 17,000, which is way down here. We'd have to see the NASDAQ tumble another, 15%, more than that, 15% to the downside. So what I'd be building would be this kind of bear trap scenario where I can have this big profit target, and then my line in the sand is down here. So over the next 43 days, is this NASDAQ going to drop, 15%? Anything's possible, but I would say likely not. So I'm going to try to generate some income on this trade. All right. Is it FOMC today? No. FOMC is going to be at the end of the month. It's going to be the 31st. All right. So I'm going to try to take this trade for 10 and change. Let me try 10.25. So 10.25 not filling. Let's go 10.10. Got to be 25-cent increments. All right, let's try to get 10 bucks then. 10 bucks. Come on, man. Not filling at $10. Why not? All right, I'll try one more at 9.50, and then that's it. If it doesn't get filled, then I'll cancel the trade. All right, filled at 9.50. Okay, let's go 9732. I'm going to get this. So this is a trade I'm going to take. I'm going to get these accounts filled. Uh, 7634. I'm going to check on these margin accounts versus IRA accounts. Yeah, 9 grand in buying power. No thanks. So I'll go back to this other one for a margin account, 9151. There we go. Okay, so that'll be in. Let me get this in my trade tracker. So this is an NQ position, bit of a bear trap. All right, so this is NQ. And the expiration is 8/30/24. So I have a 19/200 by 19/100 bear put spread. And that was around $20 debit. And then the 17,000 put for around $30 credit. So my net position was filled for $950 credit. So I've got $450 max profit. I have a bear trap of $1,000. Let me look at the contents of that trade again. So I've got a max profit of around $2,200 if we're in between my levels, and I'm taking up about 40. So I'm looking for a return. If I get $450, I'm looking at about a 10% return on my buying power. Okay. So what I'm going to watch for is, number one, I've got time on my side here. Going to get some theta decay. If the Qs respond and they start to stabilize a little bit, like we might drift a little bit lower. That brings that bear trap into play. So I have a 19.2 by 19.1. That bear trap is in here. So 19.2 down to this level. This is my bear trap. All the way down here to 17,000. There. So that's a bear trap. Okay. And there we go. All right. Back to the stream. Okay. So that's a trade I just put on here. Dow, Russell, hanging in there. VIX, we still haven't made a meaningful move to the upside. I'm looking to see if the VIX can get us up into the high teens, maybe poke $20 if something gets a little gnarlier to the downside. Dollar index, you got to keep a close eye on this dollar index. This thing's been tricky all year, my opinion. Dollar index, if we hold this 103.90 level or hold this 104 support, then I think that the dollar may be range bound and still range bound. It's making some lower highs, it's making some equal lows. I think the dollar is a difficult trade right now. I'm not opposed to seeing more downside on the dollar, but I just think that confirmation isn't quite there. Yes, we've had a little bit of a slide to the dollar, but if we hold this support level, I would hold off on any type of forced selling on the dollar crosses just in case it goes right back up. Okay. Now, with the Fed cutting rates, could the market price this in aggressively? And this could be, buy the rumor. Sure. The rumor would be the Fed's going to cut rates and the market's finally been waiting for it. And so the dollar gets hit really hard. 101 to 100, those are big key levels on the dollar index. But if we hold this support, this heads right back up. Watch the range. That's what I'm talking about. Okay. Mean reversion strategies for what asset, Kyle? What trade? What currency? What symbol? What are you looking to trade? Mean reversion is fine, but it totally depends on the asset. I don't like mean reversion in stocks. I don't love mean reversions in indexes. If you're trading currencies, trading crypto, Trading things that are, ridiculously overextended, maybe. But currency is probably better for mean reversion. If you have really extreme, RSI is overbought, oversold, there's divergence on higher time frames. I do a lot of that where I'm buying low and selling high. But I don't take it down to really small time frames. I'm not a mean reversion trader on tiny time frames. I want to see like big spaces and big turning points. Okay. All right. Oil. We have some news coming out of China. Like there could be a slowdown. Copper's been dropping a lot, which is the, copper's, they call it Dr. Copper because it's a PhD in economics. If copper is down, that's usually a bad sign for the economy, global economy. Copper's up, that's a good thing. Well, copper's dumped about 15% in the last couple months. Oil, I still think oil's pretty well supported. $80 and $77.50. I'm long on oil with stop losses down below this low. So I'm looking for a swing trade on oil into here. Okay, gold and silver. Gold is up to some fresh highs. We're getting near to my, this is my measured symmetry around 25, 24. I think a nice kind of capitulated number would be 3,000 if we're just going to see, gold is this super attractive thing. At the same time, and I've mentioned this when this first started to happen on gold, watch for this potential broadening pattern, right? Price might be a little bit sloppier, a little bit messier. So if and this, I don't want to see this necessarily, but if gold goes lower, to me, that's just a better level of accumulation to the downside to buy more. But I don't necessarily want to see it, I'd like to see it break and pause and then look more and more attractive as we go higher. And I like to see gold and silver both do pretty well. Okay, silver. Underperforming compared to gold. Gold has been up and clipped some highs, and silver has not. So I still like the trade on silver, and I keep saying this, and I mean this. I like silver better than gold as far as the trade goes because this move is still measured to around 35 and change. What's nice about this is I think this Friday I'm going to take some ownership on SLV. Looks like I'm going to take about 200 shares of SLV. My 29 and 28 puts could get assigned. And I think everyone's going to take on some SLV, which I'm totally good with. So let me go to SLV here. If I show SLV positions, where's it at? There it is. Okay. So I've got the 29, the 28. What else do I have here? So the 29,876 puts right now, if you can see on my chart, it says ITM that's in the money. That means that this could be a sign for me on the weekend. After this closes end of day Friday, I could walk into that'd be 2 and 2 is 400 shares. 400 shares with a break even of 28.50. Okay, now I'd still have credit on this where I own the shares at 28.50, but net I'm actually going to be owning the shares overall because I've collected additional premium. I'm collecting about $3.30. So I own it at 28.50, but I also have collected another $3.29 in contracts here. So I'd own it around $25. I'm actually taking an ownership price on SLV that's positive. So I could turn around and repair that right away, grab a few $100 and not take the ownership if I don't want it. But anyway, I like SLV. And then I think on my IRA accounts, silver IRA accounts, I have the 29. Here we go. I have the 29 and 28, which is fine. I'll take the same assignment. This will be a cash account for one contract. I'll take 200 shares at 28.50, and that would be collecting about $2.33. So I own the shares at 28.50 minus $2.33. I'm going to own it at like $26.20. So 28.50 minus 2.33. So I'm going to own SLV at 26.17. If I don't want to hang on to those shares, if I feel like it's allocating too much cash, then I can turn around and repair that pretty easily for, maybe $500 or $1,000 profit. And then I have a wide credit spread there, 23/15 out to December. All right. So SLV is fine. And overall, I still like this instrument. I mean, if we're going sideways here, so a nice little push. If we're going sideways, I'm just going to wait and see when this thing's ready to push again. So I still like it. If you go to XAU like I have here, or XAG, Is this a, trend line break like I'm showing? Is this a low to high trend line break, and then we head back up to the highs again? Maybe we still maintain this kind of higher low. Okay, Bitcoin 64. I was looking for a Bitcoin opportunity. So number one, I talked about this as a bear trap that worked out perfectly. Now it's a low to high. Look for some type of swing and then see if Bitcoin's going to head back to highs. I like Bitcoin to the upside. Ethereum, same type of thing. Really nice support level. Broke the trend line, pulling back or pausing here, looking for another upside to retest highs. Copper, this is a bit concerning. That aggressive drop in copper from these highs especially, this doesn't look good, right? Last time we had a big drop in copper like that, we're talking about 2022 when the markets were dumping. So, I mean, copper's going to have to stabilize right away or else this gets a little bit nastier. Okay, now I am not going to do anything on copper right now in the middle of all this nonsense. What I'd rather do is look to see if we are in kind of this area, and I will trade copper futures. Okay, try to buy this thing nice and low. If we're noisy, like if we get noisy in here, but we still end up going higher, that's fine. I probably won't trade it. But if it comes down to a nice attractive support level, I will look to buy low. VIX crossing some fresh highs right now. Good. All right, we got the SPY selling off about $3-4. I got to check my gamma levels here. Oh boy. Well, we're getting some levels to light up here to the down. Okay, so I do have an iron condor that I want to check on. If price is going to drop today, well, my 562 looks like I just wasted some money on a call option. But I have some hedges out there where I've got some bear traps, and I've got an iron condor with a 555 by 550. So if that works out, awesome. We'll keep an eye on this. One thing, okay, if we break this low, we are doing something that only happens about 12% of the time. Okay, so we tap the high and we tap the low. That happens about 12% of the time. Not a high probability, but obviously the markets do what they need or want. So we'll see. But I'm watching that floor. That low is 554 on the SPY. And, in reality, I don't mind. Right now, like I am hedged on the VIX. Let me see if this thing is screaming up a little bit. We just had a fresh high. Okay, VIX is trading at 1490. We're starting to push up a little bit. I would not complain at all if we hit $16, $17, $18. I would love to see the VIX hit $20 because right now in my VIX position, right here, VIX position at 1495. I'm showing some daily P&L, but my 1050 call out to August 21st. Let's get a bit of a scare. Let's get this thing up. So right now, I'm about break even. I got in for a 450 debit, straight in for 435. I'm looking for basically intrinsic value. So if I'm long at 1050, right now this is kind of crappy here. Now that I see this, right, I'm in at 1050. Okay, and we're trading at 1494. So what's 1494? Okay, or let's just say 1495 minus 1050. $4.45, right? So right now the mid price is trading exactly there. So that means that even though I have a little bit more time in the trade, I still have 33 days left of expiration on this trade. But I'm not getting any extrinsic value, which means I'm not getting paid for time, unfortunately. But the nice thing is almost tick for tick, if I'm at a 1050 call, I'm at a 99 delta, which means that for every dollar this thing goes up, I'm getting $1 in credit. So if we get to $16, $17, $18, I'm getting another $1 of credit there, which is good. So my goal was if we poke up to $20, I get $20, okay, minus 1050 is where my strike price is. That's a 950 trade, and I paid $4.50. So plus $5 is what I'm getting as a hedge. And I'm in 5 contracts, so 5 times 5, I get $2,500 of profit on a little bit of a hedge play. So it's about a 1% hedge. Okay, so anyway, I'm watching this. So we're tapping some fresh highs today. The only downside is this: if we are going up, right? If we're going up, then the stock market is likely going down. So are you prepared? Are you positioned? Are you able to hold or withstand a market fall, a market drawdown? Okay. I've spent a lot of time the last 30 days, especially kind of getting my portfolio prepped for this, where I can stomach and handle a lot of these potential drawdowns. Okay. I don't want a big one. I mean, if we pull back, 10%, that's a lot. I'm mostly positioned for that, but yeah, I don't love it. It's not going to be fun. It's going to be scary. You're going to be wondering, like, does the market buy the dip here? We don't know. Okay. But that's what's going on. All right. Let's look at our Mag 7. Apple is down. Amazon is down. I am collared on this position. So I own the shares all the way down to like 130, by the way. And I'm collared with a 210 cover to a 180 put. And that 180 put started at 195. That's probably showing some value right now. I might have to take a look at that. Look, if we're going to drop a little bit more, I mean, let's find something to make it, protection worthy. So I'll see if I can lower my cost basis on Amazon, and then I'll still hold this thing. I'm hanging on to Amazon for a while. This has been one of my better performers this year. I own the shares around $130. I was trying to get it called away around 210. Google also down a little bit. It's going to be interesting to see how eager buyers are to jump in and get the Mag 7 all over again. Netflix is down. Or actually, Netflix hasn't moved yet with earnings today. Meta's down, Microsoft down. I'm actually kind of happy to see these things dropping. Okay, NVIDIA 118, let's freaking go. NVIDIA, do your thing. Drop to 110, drop to 100. Give me something attractive. I've got a 126 on NVIDIA. So if NVIDIA gets down to 110 or 105 or 100, I've got some pretty good profit rolling on that. So in a way, I kind of hope that we do see more downside here over the next couple of weeks. I have an expiration out to the 2nd of August. Okay, and then Tesla at 250. Tesla's been pretty resilient. I saw an interesting newsprint this morning that Cybertrucks have outsold the F-150. Are you freaking kidding me, man? Isn't that like a $150,000 truck? Like, I guess we're selling more $150,000 trucks than we are, $40,000, $50,000, $60,000 F-150s. But maybe it's the E one. Maybe it's the F-150 electric one, the Lightning or whatever. That's like a $80,000 to $100,000 truck, which is stupid. So anyway, I'd say it's all a big old ripoff. So currencies. I've got a few more minutes before I wrap up the session. In the chat, do we have an 11 o'clock guest? Let me know if we do, just so I know I can wrap it up here at 11 o'clock. But I'll get some currencies here. Dollar index is kind of how it all starts. I've been telling traders this week in my room, watching the yen crosses pretty carefully. So, the yen is getting some follow through. Just take a look at the technicals. I've been mentioning this for the last several weeks. If we don't have any clear confirmation signs, don't force a bunch of sell trades. So right now, we finally done some damage on this Aussie yen. This low, we broke the trend line. So if we go from high, low, lower high, lower low, I could see that trade happening, right? If the Japanese yen is going to get stronger, that's likely risk off in the markets, by the way. And we might be dealing with some higher volatility over the next maybe 30 to 60 days. But classically, it's a Japanese yen pair. Is this a fall and then this thing comes back up here and then pauses and then it's like, okay, now what happens? Maybe it goes to highs again. Maybe the BOJ reiterates the same thing, which is, outside of some intervention, we're not really interested in changing policy. We're not looking to raise rates, blah, blah. I don't know. So I still, I trust the Japanese yen about 50-50. It's not my favorite currency pair. Why? Because it's not technically obedient like it is compared to others. My favorite currency pair is Aussie CAD, New Zealand CAD, Aussie, New Zealand. I trade the boring, efficient, find pivots, reversion trades. Every time they go up, they pull back. Every time they go down, they pull back. Those are my favorite currency pairs to trade. It's tough when you get a breakout and it's like, okay, this market's been going nowhere for months, and all of a sudden it decides to go 500 to 1,000 pips in a straight line. That's my least favorite trading. I don't like to have to switch and pivot strategies like that in an asset like currencies when it's a lot easier when they just always are efficient. which is the currency pairs I mentioned. Okay, so long story short, on the yen crosses, because we have some a little bit of accumulation in here, I would see that as a potential magnet for a pullback. Okay, so on the shorter time frames, I could see traders getting the benefit of a short-term scalp to the upside, but that area could quickly turn into a rolling over and another sell-off between these trend lines. So if we went from inner trend line to outer trend line, there's still several hundred pips up for grabs. I mean, if we pull back to 105, 106, and then fall back to parity, that's a 500 or 600 pip drop. Wouldn't be a bad trade. But I'd still say if I'm going to take that trade, I'm going to be trading very small and being pretty conservative. CAD yen, same thing. We're right on this trend line break. Where's the outer trend line? Probably down here. Where's the past level resistance? Over here. So if it's breaking here, pulling back, looking to see if there's some follow through, that would be about it. Swiss yen is probably one of my better setups technically on the yen crosses. So a couple ways to play this one. Sell stop below and just see if this wants to continue. That's pretty easy, and that's out of the way because that way if the Swiss yen goes higher, you're not trying to guess, right? Also, with this being a sell-off point, if we go higher, 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 test the highs or run the highs, we could then put in a topping pattern and get a much bigger setup here later in the year. That wouldn't surprise me at all, actually, that this is now the left area, and this thing goes all the way back up to the highs, then folds over, and then we get a topping pattern. We trade a head and shoulders or a crown, and then we line up a really good trade. That would be something I'd sign up for. I wouldn't mind that trade. Okay, if you have other requests or currencies or charts, let me know. Let me know. Let's see here. Bank of England working with third-party supplier to resolve payment issue. What payment issue? Bank of England's having a payment issue, huh? Does the Fed have payment issues? All right, pound yen. Pound yen. High, low, lower, high, lower, low. Here's a little flat pattern area around 205. Does that drop to the outer trend line? Maybe. Maybe. Okay. So watching. I said 209 to 215 for potential intervention. We made it up to 208. I tried. Didn't get it spot on. New Zealand yen. Throw a T on there. New Zealand yen. So this one has been just a slow grind to the upside for a while. Same type of thing. If this is as anyone knows what a cup and handle is, there's essentially no structure. So if this is a high to low pullback here, and then we drop lower, that cup and handle would be breaking that low. Also, this with structure down here, this could be setting up for a trend line break, right shoulder, and then break the neckline. And all of a sudden we have a big head and shoulders pattern with a much bigger move to the downside. Lots of past resistance here as well. So am I bearish on these yen crosses? Not yet. Not really. Not yet. Okay. By the way, looking at this short term, looks like we have some manipulation going on here. A little fake out. Is this going to rip up here and find that gap again? Maybe. Maybe. I'm going to stick with that 562 because I'm already in the trade. So it is what it is. There is my 1238 gamma level, contract-wise. Current net's 1238. Strike price is 562. So it would be nice to see if this thing can, be a bit of a drop manipulation, fake out those bears, and then rip them back up here. And let's find a gamma squeeze to 562. Yeah, I bought this thing around 5 when price is around 559. So it would have been nice to buy it $2 or $3 lower, but the expiration's out to tomorrow. Okay, that's short-term stuff. Currencies. Any other currencies? What else do you want to look at? Okay, is this microphone on? Where's the chat? I haven't seen anything in 10 minutes. I'm talking to myself. Who's out there? Bueller. Must be I'm not on Wi-Fi. I'm just talking like a crazy person now in a room all by myself. All right, fair enough. Just kidding. All right, South African Rand. Oh, Patrick. Man after my heart, dude. Little crazy trader. Dogecoin. All right. Dogecoin. Haven't looked at that in a minute. South African Rand, daily time frame. Here's what I'll say. Dollar index is choppy, right? Dollar index is choppy. You've got an exotic pair that's choppy. Okay. Right now, I'd say structure-wise, we have pretty solid support in here and resistance in here. The carry trade opportunity. So there's two ways this works, right? South African Rand versus the US dollar. Let me go to cbrates.com and see what South Africa's rate is. Right now, South Africa's at 8.2. If this is going to the downside, that would be a positive swap trade. The only issue with some of these exotic crosses is when we see risk off trading. If we see risk off trading, the dollar gets stronger and it doesn't matter what the carry trade is, right? Like, I mean, again, if we're coming into support here and this thing bounces hard, let me zoom in. This is probably a pretty clean setup where if we come into support, I would say we have some support here on the Rand. So there's support. And then a little trend line behavior over here. So it's, you know, kind of coiling, kind of wedging. I would try to look for a trade where if we get some confirmation off this low, see if this dollar index wants to head back higher, and that would help the South African Rand find support. And just trade it, you know, back to the range. Looks like from around 17 and change to close to 20. I mean, that's almost 3,000 pips, right? So you're looking at about, I'm sorry, I meant like 10 to 20,000 pips. Yeah, that's 20,000 pips. But 20,000 pips is like, that's crazy, right? But you're getting like, you know, a penny per pip or 5 cents a pip. It's ridiculously small. And it's a lot of margin to trade these currency pairs. So look, I used to trade these exotics quite a bit. I traded the Mexican peso a lot. I traded the South African Rand. I did trade the Turkish lira. I traded the Russian ruble. I traded the Swedish krone, Norwegian krone. I've tried them. I've dabbled. They're fine, but they're high margin. They're a little bit less liquid than other currencies. They're certainly not majors and secondaries. So there's risk in that regard. But, you know, I mean, if you know what you're doing, it's just a trade. You know, one thing that's nice in Forex, if you trade small enough, it's just a trade. So it's not like you have to have a huge risk in here with them, but just be aware of the margins for what your broker offers. Okay, now we got some requests coming in. All right, so we got Doge, Aussie CAD, Euro Dollar, Silver. Okay, Silver's a repeat. Here you go. Silver, I am long. Every time I say this, I just think of I'm just touting. Who is it? Not Zorro, the Lone Ranger, right? Long John Silver's. Hi-ho Silver, right? Every time I say I'm long on silver, I just think of Long John Silver's. Anyway, stupid reference, but their hush puppies are good. I like silver for this. Gold is up. Okay, I'm looking to see if silver continues to catch up. I like silver to the upside. To me, this is still a measure move into the 30s. I would like to see if this is a low to high, a little bit of a pullback, and then more silver to go. Or are we going to see, you know, high, low, lower, ups? Let's go high, low, lower, high, lower, low, lower, high, lower, low. And this just has to accumulate a bit more, then go higher. But overall, I'm still bullish on silver. And I'm actually more bullish on silver than I am on gold, because I can still measure silver right now to the upside as opposed to gold, which is trading to all-time highs. All right, so we'll check that one off the box. Doge USD. Haven't looked at this one in a while. Not really interested in this one. My crypto, oh my gosh, get out of my screen. Come on, TradingView, you're better than that. I'm sticking with Bitcoin and Ethereum for my crypto. Okay, I don't trade Doge. I never traded Doge. I never traded Shiba Inu. I don't care about meme coins. I know Trump has a meme coin called MAGA. I don't give a crap about any of this stuff. Bitcoin and Ethereum, if they're the real deal, those to me are the ones. I mean, look, we're talking about legitimate registrations, you know, for getting SEC registered securities and approved ETFs. That's what I trade. You know, I'm just not interested. Now, what does Doge have to do? I don't know. But if you looked at support, you can certainly look to buy off these lows. If it comes back down to these lows, take a stab at it, risk defined. I would say if I put $1,000 on Doge, it's either going to zero, okay, or it's going up to these levels. So let's just talk numbers for a second. What would that percentage be? If I put $1,000 here at support, let's say we hit that level and we go up to revisit the highs, I would turn $1,000 into about $3 grand. It's pretty good. 3,500 bucks, not bad. It's a trade, but it's risk capital, and it's not something I'm personally not going to touch this thing. But that's what I see. Just watch the lows, watch support. I look to buy low. Akash says, sir, can I ask you something? Of course. Oh, about the pound yen. Of course. Yeah, sure. Euro dollar, Aussie CAD. Okay, let's do those really quickly. And then A1 team, if I need to go at 11, just let me know. If we're okay, then I'll just keep taking some requests for a few more minutes, but I'll wrap up here in just a moment. Aussie CAD at 92. I'm long in this one. Any type of dips and pullbacks, this could be a slow burn channel to the upside. Okay, but I'm looking to get back to these highs around 94 to 95. So any pullbacks here on Aussie CAD, I'm bullish, and I'm looking to take it up towards 94, 95. Meaning like 9,400 and 9,500. That's my profit window, right? Euro dollar, we did. Euro dollar, you got to watch the dollar index. I don't really have a good decision on dollar index or euro dollar right now. I'm out of this one. Silver, we did. Pound yen, what do you got? Nick Phillips, ready to go? Okay, Nick. Sounds good. I'll let you have it here in just 1 minute. Do I trade Sol US dollar? No. I did in a little bit. I had holdings of like Gemini, Batcoin, Solana. I had some of those. Once I had a big pop when we hit that first all-time high with Bitcoin at like 60 to 64. I dumped all those positions, turned them into cash, and converted them to Bitcoin. So my holdings are Bitcoin, Ethereum. That's it. Okay. Is it possible for the pound to fall against the yen? It's more so, it's not really that. It's more so that you need the yen to get stronger. It's not about the pound falling against the yen, because what you're looking for on all the yen crosses is the yen as a basket has to be the mover. That's what's so tricky about the yen. Right now, the yen has very little reason to go strong. Bank of Japan isn't really shifting policy. They're not being hawkish. They've just gone from negative interest rates to zero. The carry trade is still alive and well. It's the best arbitrage in the world right now, which is you borrow in yen and you buy anything you want and get swap. Until that goes away, the Japanese yen, and if we have some risk appetite out there, the Japanese yen just doesn't show the type of strength that we would probably like to see. Okay. All right. Nick's in the background. I'll let you go for today. Thanks for being with us here for this segment. Nick Phillips is coming up. Have a good rest of the day. Like and subscribe as always. We'll see you soon. Thanks.
Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped or find the link in the description of this live stream and you'll be connected with someone right away. Now, back to the A1 Trading Show.
Hey, what is going on, everybody? I am just adding in my Instagram stream key here to get this going live on my Instagram. Welcome to this segment, Chris Pulver. Thank you for turning it over to me. Did a great job. I love watching Chris's stuff when I jump on and see he's live. I learn a lot from that dude. He truly a expert of so many things. Very cool to see him in action. All right. And I believe I am live now on Instagram, so we are good to go. All right, guys, what's up? Let's go over a couple things here. I wanted to first take a look at what I've been doing over the last 24 hours. So this is kind of, I've kept a little bit of a track record here. It's becoming a bit of a track record here on my blog on Substack that I've started. So first, the tech issue, right? So this is something that I had going on yesterday with my prop firm that I'm working with, which is TopStep. We had a ton of tech issues yesterday with Tradeovate and TopStep X and blah, 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 blah. And basically, I wrote this blog article about dealing with tech issues and how it's a normal part of the process, right? If you guys have ever used any kind of software for your trading, we all have, all human beings have, right? Oh, I thought I was sharing my screen. I am not sharing my screen. Boom. Share. Cool deal. So this this article is basically, it can all be summed up in this little paragraph right here. Cash is a position, right? Oftentimes as traders, we feel the need to be involved in the market as much as possible. So um, when you're having tech issues, it can be a very how can I say this? It can be very tempting to lose your mind a little bit because you're having tech issues. And I saw it yesterday in a bunch of the discords around some of the softwares that were facing issues. People were absolutely losing their minds. But you should take tech issues, if you face them, when you face them, I should say, you should take it as a signal. I said this right here. This was maybe one of the most important paragraphs of this entire article. Tech issues can be frustrating, but they should be treated like any other signal from the market. If the opportunities you are looking for are not present, you should walk away and come back again when the opportunities are present. So, was dealing with that yesterday afternoon. Tech issues started to pop up. I had actually, it affected a trade that I was in. I took a JPY buy. I was up about 500 bucks on my combines, and I hit exit. And when I hit exit, my order fill was absolute trash, and I ended up down like 100 bucks. Didn't make any sense. So I contacted support, and they are working on that. But that's another part of tech issues. If you're dealing with them, just reach out to support and be patient and act like a professional. All right, so let's see. Moving on from that, we had the odd employment data drop last night. So by the numbers here, you can see the unemployment came in pretty hot, which is negative for the Australian dollar. But employment change, participation rate, and full-time employment change all came out with upside for the Australian dollar. So we had a bit of a mixed bag. Now, we don't trade mixed data in my private group, right? We need all the data to point in one direction or the other. However, I did trade this mixed data, but it was on accident because uh, I like to categorize accidental trades as fat fingering. If you get into a trade on accident by swiping across your mouse or hitting the enter key when you don't mean to, or vice versa, you get out of a trade the exact same way. I call it fat fingering the trade. I fat brained my trade last night on the Australian dollar because I saw the unemployment number. I saw all of these numbers, and for whatever reason, my brain said, what did I say exactly? High numbers across the board, Australian dollar strength. Don't know why. Don't know why I did not formulate this thought process a little bit better, but it is what it is. I got in on the trade, and then as I was in this trade, the management of it was interesting because I did not realize that I had messed up my data read until I was sitting down in this area in drawdown. So I took profits right here in this area, got a nice little 1 to 1.2 off of this. And then price came back down to break even. I was considering getting out, went and reviewed the data again and realized my blunder, but I decided to accept the rest of the risk because I had already taken out partial profits. If I had hit stop loss, it basically just would have been a break even trade for me. And so I decided to hold a little bit longer. Once price came back up into this area and started trading above this zone and gave this little bit of rejection, pop back up here. I got out right about here. Just to go ahead and protect myself from the mixed data. So overall, nothing that we can take out of this data moving forward for what the Australian dollar may or may not be doing because it's mixed. You have the unemployment numbers pointing towards a softening labor market, but you have the employment change, participation rate, and the full-time employment change pointing to a stronger Australian dollar labor market. So mixed data. What do you do when one's pointing one way and one's pointing the other? You walk away and you look for another opportunity. Beyond that, we also had pound employment data this morning, and that was another mixed bag. You had unemployment coming out lower, the unemployment change coming out lower. You had the employment change also coming out lower, or sorry, unemployment change coming out higher than expected, the employment change coming out lower than expected, and then the average earnings, which is the most important thing right now for UK labor data, is the average earnings. The ONS is having statistical data issues that is causing the employment change, unemployment change, and unemployment rate numbers to not be entirely reliable for the markets. They have said that by Q4 of this year, their new data collection method should be rounded out and tested thoroughly enough to where they will trust it again as being reliable data. So the only thing that the market can really take into account when it comes to UK labor data, uh, what it can count the most credit by is the average earnings, because these numbers are not affected by the ONS statistical data issues. And we got those right as expected. So personally, I was up last night through 9:30 p.m. Eastern Standard Time to trade odd, and then past that to 2 a.m. to trade UK labor data. And then I was up again at 8 this morning to trade the Euro Central Bank interest rate decision, which was a kick the can down the road. We're data dependent, waiting for the next batch of data before we make any decisions. Let's see if we can pull up ECB. All right, guys, as I'm going through this, as always, if you have anything that you want me to check out, go ahead and drop it in the chat. And when I get to the Q&A portion of this segment, I will go through all of the pairs that you guys ask. So let's see. Okay, so right here. The Governing Council will continue to follow a data-dependent and meeting-by-meeting approach to determine the appropriate level and duration of restriction. In particular, its interest rate decisions will be based on its assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. So, for us, looking forward to Euro data in the future, what are we going to be paying attention to the most? Inflation. That's what they have said. In particular, they're data dependent. In particular, their interest rate decisions will be based on the inflation outlook. So we will be paying attention more so to inflation numbers out of Euro than anything else. Labor data, growth, any of it. The most important thing to us is going to be the inflation outlook. And then President Lagarde got up and spent about 60 to 90 minutes answering questions and continuing to kick the can down the road with a bunch of data dependent lines of talking. She did say, yeah, inflation is to fluctuate near the current levels for the rest of the year. So inflation is going to just kind of hang out. It's going to consolidate, right? Not really actionable. Risk to growth are tilted to the downside. That's, a little hawkish in terms of the risk. If I'm reading this correctly, the risk to growth are tilted to the downside, so they're experiencing less risk to growth. Wage profits and geopolitics are upside inflation risk. So this is another little bit of something that we've been watching for the euro with the French elections that have happened over the last few weeks. Is the geopolitical situation in the area? How is that making investors confident or not confident when it comes to investing in the euro? But overall, a very data dependent, nothing sandwich out of the ECB meeting this morning. And that has basically been our morning. We had a little bit of mixed data out of the jobless claims situation with the US. So we're seeing higher than expected jobless claims, uh, initial and continued, but they are inside of the bank range figures. So if you see here on this terminal, we have the low and the high from the polled financial institutions for initial jobless claims. The high was 250. We came in at 243. And then for the continued jobless claims, the high was 1899 and we came in at 1867. So while both of these numbers came out above the previous and the forecasted median, they were inside the bank range, not enough to surprise the markets. You add that to the fact that we had uh, positive data out of the Philly Fed business index. It has just been a mixed data type of day. So personally, when it comes to the dollar, my opinion is that the dollar's on a bit of a relief rally from all of the CPI weakness. We have seen a weak dollar, and now we need a little bit of a relief rally. I don't anticipate it going back up above 104.5 unless we get data next week that tells us something different. But I could see it doing a couple things. Today is Thursday. I could see today and tomorrow being a bunch of nothing. It could hang out in this area, maybe pop up into this zone and consolidate, or it stays here and consolidates. The other thing I could see it doing is finishing out the day in this general area, and then tomorrow at the end of the week, falling off to close the week on a bearish, heavier bearish note. But I really don't anticipate getting involved in this unless I'm seeing some solid downside move at the beginning of New York session tomorrow. Let's see. Let's go take a look at NASDAQ. I haven't looked at NASDAQ or ES in the last like 2 or 3 days. What a fall off. Very bearish week. Definitely counter to what we've been experiencing for the last couple months. So interesting to see where this is at right now. This is tough because equities indices have just been on an absolute tear to the upside. So if I was looking to get involved in a buy situation on this, I would maybe let price give me a bit of a bullish indication here on this support area. If it breaks down below this support area, I think the next major target would be this area here, where you have previous resistance turned into support and pushed up from there. But I don't know. It's going to be tough. I believe, if I remember correctly, that the fall off of Nasdaq specifically over the last couple days has been due to the chip issues with Nvidia. Don't quote me exactly on that, but I do remember hearing whisperings in the interwebs yesterday about the Nvidia chip issues. Let's see. Nvidia shares tumble over 6% amid geopolitical fears in chip sector. The global chip stocks from AI giant Nvidia tumbled. The drop came as the Biden administration weighed tighter export controls to stymie, I believe that's how you say that word, China, and former President Trump made comments that sparked fresh doubt about America's commitment to defend Taiwan. So the issue surrounding the basically the entire chip market, that AI is backed off of is what is causing the NASDAQ to drop so heavily. So very, very interesting stuff there. All right, let's see. All right, guys, if you have anything, any charts that you want me to look at, anything you want me to go over, gold, Euro USD, anything like that, feel free to drop it in the chat. I would love to see some dollar weakness actually start to pop into the market this afternoon so I can buy this yen up a little bit from this area. It's not a bad little support zone, which again, for those of you that aren't trading futures, if you're trading Forex, this is the exact same thing as a UJ sell. Looking for UJ sells from this area too, being a sort of a pretty tough resistance. It popped up into here and then dropped all the way down to here from this area. So would be great if we could get some dollar weakness to start factoring in. I stay in Arizona, and man, the dollar is weak. LOL. The unemployment claims came in hot. A lot of people not working right now. So the problem with the unemployment claims coming in hot, I'm definitely not going to, say that you're wrong on that. They came in hot, but they weren't outside of the bank range high. And we had good data out of the Philly Fed Business Index. So typically, if the unemployment claims were like ridiculously hot and you had no other factor, we would have already seen the doxy fall to the downside, right? So this data dropped at, when was it, 8:30? And we had this initial drop to the downside where a ton of people, they see this number. People see this number, initial jobless claims 243. It came out below the median forecast, or if you go to Forex Factory, this is what a lot of people that try to trade data don't always understand about it. Unemployment claims 243 came out above 229, right? And so this means more people are claiming unemployment, less people making money. Less people making money means less people spending money. Less people spending money means inflation has a chance to come down, and then vice versa. Interest rates can, not vice versa, but continuing off of that, interest rates could have the opportunity to come down. The problem with that is there is these ranges from the major financial institutions, which are the real market, right? Like they're the big players. They submit their ranges for what they anticipate the number to be, and this forecast is just a average of those numbers. So with that being said, this came out above the forecasted, but inside the bank range. It doesn't, it like, yeah, it might be hotter than the average expectation, but it's not hotter than the overall range. So there's only so much of a surprise that can be gained from that information. It's not so incredibly weak that it dragged the dollar down from here. In fact, the dollar completely rallied beyond the price that the dollar was trading at when the data dropped. Yep. So yeah, you got to watch how the dollar reacts. For me, again, I can't trade this. I couldn't take a US dollar trade this morning the way that I typically would, which is I'd pick something like Australian dollar. I like to trade odd against the US dollar a lot. This would have been a buy scenario for me, which would have played into the sort of mixed data trade that I played last night. But right here is where that data dropped on the 1 minute. Let's go to the 5-second. I tend to trade this stuff off the 5 and the 15-second. I like to get involved really quickly. if we get the right data. But when this data dropped, it was immediately a no-go for me because jobless claims came out showing us dollar weakness, and Philly Fed Business Index came out showing us strength, a little bit of weakness, strength, weakness, strength. This is mixed data. So this tells us dollar strength and this tells us dollar weakness. I'm not getting involved at all. Now, caveat, had the jobless claims and the Philly Fed Index both came out printing red, showing us dollar weakness, and we had this little red lightning bolt here pop up that showed we got a surprise outside of the high and low ranges. In this case, it would have been the low for the Philly Fed and the high for the jobless claims. If all of that had came out perfectly, I would have been involved in this trade within 5 to 15 seconds, taking it to the upside. It's the exact same trade that I took last night on odd. I got in right here on this candlestick pullback. Now, granted, again, I misread this data, but the same idea applies. The data drops, the markets agree. I get in within 5 to 15 seconds and get out usually pretty quickly. I tend to have areas marked up ahead of time on the higher time frames, like the 30-minute, 15-minute, 1 hour, to see where price may face challenges trying to break beyond with that new data hitting the market. Yeah, as far as the dollar strength today, Yeti said, I hope the dollar gets weaker. The dollar could be strong a little. The Doxy strength today, I mentioned this earlier. I think it is simply like a market, the market experience of relief after a big move. So whenever you have a move in one direction, you have a relief rally. You have a little bit of a pullback. Another move, you have a relief rally. It doesn't mean like the Doxy isn't necessarily strong in this area. It's just relieving a little bit of the pressure from the selling. Relieving some of the pressure. It's not, to me, the Doxy is not strong. It's still weak. And so what's happening right now? Well, if you're holding to the selling bias and you're not just trying to scalp this going both ways, you're simply waiting for an opportunity somewhere within this leg to get short. Maybe even the top of this leg if it comes all the way back up here to retest 104.5 area. But for me, I'm looking for somewhere in this zone to get short. And it's probably going to be a factor of tomorrow morning, maybe during New York session, at the open of the New York session. If the volume starts to come in and shows us that the market is ready to start shorting the dollar from wherever it's at in the morning, that's my anticipation. But, I could be wrong. This thing could just hang out and wait until next week. We have flash PMIs on Wednesday. We could see a bunch of nothing out of the dollar until next Wednesday. All right, let's see gold. Gold is obviously still bullish. I think I said this yesterday. I don't love gold at these levels for anything. I don't want to short it from here, and I'm not interested in getting long from here. If something insane was to happen, now this is really interesting, and this is a way that you can trade gold if you're not aware of this. Trading gold as a safe haven. So Saturday, U.S. President Trump there's an assassination attempt on his life. That is a very scary thing. Absolutely terrifying. Gold on Sunday opens up to the downside a little bit, but ultimately ends up over the course of the next few days acting in a safe haven flow manner. For me, I didn't get involved in this trade because it wasn't an immediate reaction. Sunday night, I was looking at the market, waiting for that risk off scenario to start immediately populating itself, and it didn't. So I kind of took that as a signal from the rest of the market that they didn't care about the assassination attempt of the former US president, which absolutely blows my mind. It doesn't matter who it is. If it was Trump, if it was Biden, if it was Obama, Bush, take us back 50 presidents, any of them having an assassination attempt on their life is absolutely mind-blowing to me. And I thought for sure it would factor in a risk-off scenario for the markets. Now, I say all that to say, if something wild happens, again, let's say China invades Taiwan tomorrow, hopefully it doesn't happen. But if they do, you should theoretically see safe haven flows immediately start to open or flow into gold, because the markets are going to get fear, uncertainty, and doubt. The emotions of the market, fear and greed, drive the market. When the market is fearful, gold is going to pop to the upside because it is a safe haven currency. Investors will take their money out of the stock market, out of traditionally riskier assets, and they're going to put them into safe havens like gold. So, and the US dollar. So US dollar is a safe haven, Japanese yen is a safe haven currency, gold is a safe haven. Some of your risk assets are things like your equities, your stocks, your Australian dollar, New Zealand dollar, CAD. They're all risk asset currencies. They will fall to the downside, and gold, US dollar, Japanese yen, Swiss should theoretically pop to the upside. But yeah, that's the only way I tend to trade gold is based on safe haven flows after something major has happened. So maybe once, 2, 3 times a year, possibly I'll trade gold. It's not often. Let's see, 11:32. If you guys don't have any more questions for me, I think I'm gonna go ahead and wrap up here, and I will see you guys on the next one. I'm gonna give you guys a couple minutes to type up anything if you have any questions. I'm not seeing anything come through yet. All right, guys. What's your YouTube page again? My YouTube is official Nick Phillips. My Instagram is official Nick Phillips. The only thing that is different for me is Twitter, which is it's Nick Phillips, official Nick Phillips. Somebody already got that one, so couldn't get that. But official Nick Phillips on everything. Substack is honestly CHF JPY Safe Haven. See, Lee James, that's a very good question. The pair CHF JPY. This is where trading currency pairs, the nuances behind them are important to understand. If you have a safe haven event hitting the market where your safe haven currencies, which are going to be USD, JPY, CHF, are anticipated to go to the upside, something like CHF JPY, you have CHF is strong and JPY is strong. You're trading a strong currency against a strong currency. Not a great idea. So what's better? In a risk-off scenario, a brand new war pops off tomorrow. If you want to trade currency pairs that aren't, US backed or something, you want to pick something where you have a safe haven strength versus a risk asset weakness. So what would this be? You could take something like odd CHF to the downside. So in a safe haven situation, you have the risk asset odd going weak, CHF going strong. That's a lot of volatility coming into that pair. Odd JPY, the exact same thing. Odd USD is pretty much my go-to because I trade futures. So I tend to trade Australian dollar futures to the downside in a risk-off scenario. Let's see some other examples. Some other combinations here. CAD JPY in a risk off scenario should go to the downside as well. You have a risk asset being the Canadian dollar against the Japanese yen, a safe haven. NZD JPY to the downside, NZD CHF to the downside. I wouldn't trade something like, I wouldn't trade UJ as a safe haven flow. I wouldn't trade USD CHF as a safe haven flow, or CHF JPY as a safe haven flow. Likewise, I wouldn't try to sell odd NZD in a safe haven situation. I wouldn't try to sell odd CAD because I've got two weak currencies. I wouldn't try to sell NZD CAD because, again, two weak currencies. So you want to pair a weak currency against a strong currency. When it comes to trading currency pairs, that's like foundational fundamentals. You want to trade a strong currency against a weak currency at all times. If you have two strong currencies in a situation and you're trying to buy up the currency pair, like Swiss JPY, you have two strong currencies. What is most likely, how should I say this? What is highly likely to happen is this, because you have strong against strong, it's going to go nowhere, right? And maybe it'll go a little to the upside. But if you were to take this same trade with a pair like odd CHF at a time where CHF JPY would be going maybe a little bullish, you're going to see odd CHF with much more volatility to the downside. Is CHF JPY a safe too? I think hopefully I answered that for you. CHF JPY. So each currency by itself, CHF, the Swiss franc, is a safe haven, and JPY, Japanese yen, is a safe haven currency. The pair itself, not something I really would trade in a safe haven or risk on or risk off manner. Odd JPY. Frog Boy, are you asking me to look at that pair or explain how that works with risk flows? Yeti, I am. You've been following me for 5 years. That's crazy, dude. That's awesome. Only you will know if a pair is safe. Risk flows. Okay, so Frog Boy, odd JPY, risk flows. So let's do this. I'm gonna scroll in here. Bring us to a little bit of a, what the hell? All right. Risk flow lesson. We'll go safe havens, risk assets. All right. So in times of geopolitical turmoil, we have, let's just say, Israel and Hamas attack October 7th, right? So the world is scared. Something major is happening. Everybody's holding their breath a little bit. Where is this about to go, right? The world is feeling fear. The markets are feeling fear. Investors are going to take their money out of assets that are traditionally seen as riskier. They're more volatile. It's not something you want to hold at a time where you're scared. They're going to take it out of your risk assets. We'll list the currencies right now. AUD, NZD, CAD. They're going to take them out of these assets, and they're going to dump them into USD, JPY, CHF, typically. Another example of risk assets are your equities or your indices, being NASDAQ, all stocks, basically. They're going to take money out of stocks and they're going to funnel them into something like gold, maybe. So at a time when people are feeling scared in the market, you're going to see these. Let's see if I can go bullish. Safe havens are going to go bullish, and risk assets are going to go bearish. So let's break that down for pairs. We'll go risk off scenario, which is the world is scared. You're going to see USD odd, USD bearish, NZD, USD bearish, odd, JPY. Here's your answer, Frog Boy. Bearish. Feels like such an insult calling you Frog Boy. I think that's my new favorite insult. I hope I don't offend you with that, but I'm going to call people Frog Boy from now on. Somebody's messing with me. All right, let's see. NZD, JPY, bearish. CAD, JPY, bearish. AUD, CHF will go bearish. Should go bearish. NZD, CHF, bearish. CAD, CHF, bearish. And then let me also do, am I missing something? I am missing something. USD, CAD, bullish. And then NAS, ES, Dow should go bearish. And gold will go bullish. And then to do I believe I got everything. Yeti said he started off with GBP USD, but that thing is ugly. I'll be honest, man. I started off, I've been in the market since 2017. So I've traded a vast array of approaches. One of the coolest things that I ever learned about trading Forex specifically, but it applies to all markets, is knowing the fundamentals of the market as a whole, the macro fundamentals, will help you to identify opportunities across a wide array of currencies. So you hear this kind of train of thought in the mainstream trading Instagram influencer world where people say stuff like pick one currency pair and master it. Like, that doesn't make any sense. If I was to say anything, I would say pick fundamentals and technicals and master them, right? Because the asset is going to be, it should be based on fundamentals to some degree, right? I think there may be some technical opportunities across an asset that might not have any fundamental bias baked into it. Cool. But for the most part, you should be looking at the asset. You should be choosing an asset based on fundamentals of that asset. If you get news that hits the market that tells you the New Zealand dollar is incredibly fundamentally weak, but we see the New Zealand dollar trading higher, and then as that news hits, starting to price in that new weakness, you want to be involved in NZD to the downside. And a way that you could pick a good NZD pair, if you're not just trading futures, is go to a currency strength chart. You see NZDs going to the downside, look for the stronger currency. The strongest currency of the session might be a good pair, a good currency to pair that up against. So NZD to the downside, and we have USD to the upside. You're going to sell NZD, USD all day long. That's I think one of the most professional ways to approach picking your assets, right? Is let the fundamentals drive your asset decisions. But all right, guys, I've gone over here a little bit by about 15 minutes, I think. Feel free to follow me on everything at official Nick Phillips. My Substack is my new love. I have thoroughly enjoyed and found a lot of satisfaction in writing about the market in these blog style posts. So I've got stuff in here where I follow up on economic data releases. I follow up on a tech issue that we were having across the board yesterday, and then some psychology stuff. This is, a little article here on my thought process behind the assassination attempt of Donald Trump. So yeah, if you want to follow me there, follow me there. I'm very excited to be writing some on the market now. And if you guys have any questions, feel free to hit me up. All right, guys, I will see you on the next one. Y'all have a great day. From all of us here at A1, safe trading.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.